Golden Real Estate Market Update for January 2026. Happy New Year, folks. Today we're diving straight into it. What's really happening in Golden's real estate market right now? There's one trend in the December data that matters more than anything else, and if you're thinking about buying or selling in 2026, understanding this shift could significantly affect your timing and your expectations. If you live in Golden, own property here, or are closely watching this market, local data matters far more than national headlines. Golden sits at the intersection of lifestyle demand, employment stability, and tourism influence, which means it behaves than many other Kootenay communities. Before we break down the key trend forming right now, let's clearly establish where Golden and the broader Kootenay region finished out as we close out 2025. We'll start with the Kootenay region overall, because Golden is still influenced by regional momentum. In December of 2025, the Golden region recorded 153 residential sales, which is up 25.4% compared to December of 2024. Dollar volume reached $81.9 million. Yeah, a lot. And that is an increase of 27.1% year over year. At the same time, active listings declined by 4.3%, meaning demand strengthened faster than supply heading into year end. Now let's zoom in on Golden specifically. In December, 6 single-family homes sold. The single-family benchmark price is $650,700, up 0.8% year over year. 0 townhomes sold, 1 apartment sale with a benchmark price of $445,600, down 0.8% year over year. For December, historically one of the quietest months of the year, this is solid, balanced activity. What stands out is not volume, but price stability in a market that experienced strong appreciation in previous years. This data aligns closely with what people are seeing on the ground in Golden. Buyers are still active, but they're deliberate and analytical. This isn't a market driven by panic or speculation. Buyers here tend to fall into 3 broad categories: local owner-occupiers, lifestyle buyers, and long-term holders. All 3 groups are cautious right now. Sellers, meanwhile, are rarely forced. Many Golden homeowners have meaningful equity and strong attachment to the community. That limits distressed selling and keeps inventory from ballooning, even when market and demand softens. This combination of steady demand and patient ownership defines Golden more than almost any other local factor. So here's the big bad signal that we need to be paying attention to. In Golden right now, across the Kootenay region, sales are rising while inventory is tightening. Yet price growth remains modest. In Golden, that shows up clearly. Transactions are happening, but benchmark prices are barely moving. That tells us something important. This market is not weakening, it's just normalizing. Leverage is no longer one-sided. Buyers have time and information. Sellers still have equity and control, but only when homes are priced correctly. This is what a healthier market looks like after several years of rapid change. So why does it still feel uncomfortable? Well, if you're watching this and thinking, this doesn't feel like a strong market, that reaction makes sense. Mortgage payments are much higher than they were just a few years ago. Everyday costs, groceries, fuel, utilities, they're higher too. Even well-qualified buyers feel more financial pressure than before. And this is what economists often describe as per capita slowdown. The economy continues functioning, but individual households feel stretched. In Golden, that shows up as fewer emotional purchases and more long-term thinking. Buyers are asking, does this still make sense 5 or 10 years from now? Sellers are asking, if I sell, can I actually replace what I have? And that mindset slows activity, but it also prevents sharp corrections. Rates, renewals, and pressure point. Well, I tell you what, interest rates are no longer climbing aggressively, but they still remain elevated compared to the ultra low rates many homeowners locked into between 2020 and 2022. Between now and the end of 2026, a large share of Canadian mortgages they will renew. Even if rates ease modestly, many payments will still reset higher than what owners are used to. In Golden, this rarely leads to panic selling. Many owners have conservative leverage and strong equity positions. However, it can create selective listing pressure, particularly for owners with secondary or recreational properties, households managing variable income tied to tourism or seasonal work, and owners whose renewal timing coincides with higher living costs. And this is why inventory patterns in 2026 will matter more than any interest rate headlines alone. So what should a buyer do right now? Well, if you're a buyer looking in Golden, this market is going to reward patience and preparation. First, make sure the payments work today without relying on future rate cuts. Second, focus on homes with larger and longer days on market, especially where sales are flexible on terms rather than just price. Third, think long term. Golden purchases tend to make the most sense over a 5 to 10 year horizon, not just as a short-term move. You don't need to rush, but you do need to be ready. Inventory here remains limited, and the right opportunities often appear quietly. And so if I'm a seller, what should I do? Well, I tell you what, for sellers, the biggest risk right now is overpricing. Don't do it. Nobody's going to be chasing it. Don't test the market and see what you're going to get. Golden buyers are informed, cautious, and value focused. They're not interested in chasing listings upwards just to win. Homes that sell today are priced realistically from the start and clearly justify their value. If you're considering selling in 2026, your success will come from strategy, not just optimism. Your preparation, pricing, discipline, and patience matter far more than speed. So, here's some local market perspective for you. Golden behaves differently than purely lifestyle or purely employment-driven markets, and that's a strength. This is a hybrid community with strong local ownership, tourism influence, and long-term holding patterns. That naturally limits volatility. When activity slows, prices tend to stabilize rather than fall sharply. The December data reflects exactly that: steady interest, selective buying, and stable pricing, despite higher costs, despite higher borrowing costs. So as we look ahead, the most important factor for Golden won't be speculation or interest rate predictions. It will be household math and lifestyle priorities. Affordability, renewals, employment stability, and long-term plans will drive decisions more than any headline. That typically leads to fewer transactions, but healthier ones. This is how markets reset sustainably after rapid change. Here's the bottom line for Golden. The market is cooling into balance, not sliding backwards, falling off a cliff, or imploding. Prices are stable, activity is selective, and neither buyers nor sellers are under pressure. This is a market that rewards clarity, patience, and long-term thinking, not just urgency. So if you're planning a move in Golden in 2026, whether you're buying, selling, or simply deciding what do I do next, focus less on the predictions and more on the preparation. Markets like this don't announce opportunity loudly. They reward people who understand the local data, respect the pace, and move with intention when the timing is right. See you in the next video.